This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Well, Chapter 25 brings us finally, and no doubt for you, thankfully, to the last of the taxes that are within our Tax UK syllabus. And this tax, value-added tax, or VAT as we'll know it from now on, is a slightly different tax to those that we've seen before. I don't suppose you'll remember the introductory chapter where you had various issues pertaining to the tax system dealt with. Let me take you back to and remind you about one of those areas in that first chapter. And it was this area of a comparison of direct and indirect taxation. All of the taxes that we've seen so far, which as you'll know, income tax, corporation tax, capital gains tax and inheritance tax there, these are all said to be direct taxation. Why the word direct? Taxes are paid directly to the government based on the income and profit of the individual. So the or the company as the case may be, the taxpayer pays taxes directly there to the government. There will be an assessment of an individual, there'll be an assessment of the company. Neither the individual or the company has to settle and pay that tax liability by the various due dates. But what happens with VAT is somewhat different. It, again, if you're not used to the name value-added tax, what you may be used to in terms of maybe your domestic system is a sales tax. Now then, this is known as an indirect taxation. Why? Because the individual does not pay that tax directly over to HMRC. There is an intermediary. Taxes are collected via an intermediary who passes them on to the government. For example, this what we see with VAT, where the consumer pays VAT to a supplier trader and the trader then pays over to the government. So you or I as individual consumers, when we go into a shop and we buy a product, will be paying a price inclusive of VAT. Now, the VAT rate, the standard rate of VAT, as you'll discover in the first lecture on this chapter, is 20%. So if the retailer was, as you'll see in the did examples in the first detailed lecture, was wishing to sell their product for £100, then if standard rate VAT at 20% has to be paid on that, then they must sell that product for £120, inclusive of VAT. So I, the consumer, go to the shop, yeah, I want that, I pay over 120. I do not pay over two separate amounts. I don't pay the trader £100 and HMRC £20. I pay the trader £120. And it is the trader's responsibility, as you'll discover within this chapter. It is the trader's responsibility then to account for that VAT. Now, what a trader will have, of course, is collecting amounts of VAT paid by their customers. They collect the money in, they sell me the product for £120. Of that 120, £100 is theirs, £20 belongs to Her Majesty's Revenue and Customs. But they, in turn, will have been a customer from a supplier business, where again they will have been charged VAT. So what we'll discover in this chapter is that for a trader, on the sales that the trader makes, they have to charge output VAT. On the sale going out, output VAT. Again, at the standard rate, if relevant, 20%. But on the purchases that they make, on the expenses they incur, when they pay the bill for the goods that they have bought, for the services that have been performed for them, and they're paying to other VAT registered businesses, then they have to pay an amount also inclusive of VAT. So they've suffered some input VAT on what they bought in. The goods bought in, materials purchased, the services performed by suppliers to their particular business. So what they will do for a set VAT return period is to account for the excess of the output VAT on the sales that they have made over the input VAT that they have suffered on the purchases and expenses that they have incurred. And in that way, HMRC gets its money. Each trader, for each relevant VAT return period, will submit that VAT return and pay over the extra amount of VAT made on their sales as compared to what they've suffered on their purchases and expenses. So it is the trader that is accounting for that VAT, not the individual. That individual, like you or I, walking into the shop, that final consumer, we pay a figure. For me, in my example, £120. We do not segregate between the trader and HMRC. The trader has to account for that VAT. Okay, so we've got direct taxes, as we have seen, and that form basically the vast majority of our syllabus. And now we've got an indirect tax, VAT. Now, we are lucky here in as much as, well, I say we are lucky, I'm lucky, in as much as the VAT legislation, as it impacts in the Tax UK syllabus, has not changed over the last 2 years, nor indeed have the relevant rates of VAT. That for us is basically the standard rate of VAT at 20%. There's also a zero rate, but these rates have not changed over these last 2 years. The so-called VAT registration limits. What happens is that a business does not necessarily have to account for VAT if they are small, if they do not go above the VAT registration limit. Most businesses, of course, as we'll discover, will go above that VAT registration limit. But those limits, and indeed not just a registration, but also a deregistration limit that we'll meet in the opening lectures on this chapter, those limits have not changed. So what we've got is a syllabus and an exam where rates and allowances haven't changed. Now, what that means is, of course, is that, again, why it's advantageous to me, the lectures that you'll be seeing throughout this chapter are the lectures taken from Finance Act 2017. Things have not changed. The system hasn't changed. The rates, the allowances, the thresholds, these have not changed. It's all the same. There's only one slight tiny little technical difference, and it is incredibly tiny, is that there's a little bit of admin that has now come in. We know that the world indeed is going, and has been for many years, online. Well, HMRC have been going online over the last few years as well. And now, in terms of VAT, we have a system known as Making Tax Digital that works across all of the taxes. And what they have in terms of VAT is now a requirement for VAT-registered businesses, or the vast majority anyway of VAT-registered businesses, to do everything online. Now, there is a small note on that by the examiner. Irrespective of the separate notes on each of the taxes that you've been referenced to as you've gone through at the end of each of these chapters, the technical articles, there's been one chapter that has been continuously referenced at the end of most of the chapters, and that is the technical update, that Finance Act 2019 technical update issued by the ACCA examining team. And at the very end of that technical update, there's a tiny little bit on VAT, which basically tells you, like I just told you, that nothing has changed there since last year. Indeed, since Finance Act of 2017, let alone Finance Act of 2018. And they do a little example, such as you'll see within these lectures anyway, but one for you to work through at the end of these lectures. And also a little note there about making tax digital. And it is a little note. It's about 2 paragraphs, and one of those paragraphs is about 1 sentence long. And it just tells us that, yeah, Making Tax Digital says we're going online. These businesses are required now to have the software needed to submit returns online, but these particular businesses don't have to do that. Check that out, please. Again, at the end of all of these lectures, check that out. But I've said to you, the lectures that you'll be seeing, and I don't want you to worry about this, are the lectures recorded for Finance Act 2017, because nothing's changed there. Now, Of course, back in Finance Act 2017 lectures, we're using the Finance Act 2017 material. Now, you're used to this. You'll have seen it in many of the preceding chapters, not least, of course, some reference to it, though not as much here, within the chapter on IHT. What the only changes that you will see between the material that you are using and will continue to use, the Finance Act 2019 study notes there, the only difference between that, which is your source document to be used all the time, and what you will see on the lectures, through those lectures, is in the examples, the dates have changed. The vast majority of the time you will see that the dates would be back in 2017 or 2018 in the lectures. Those dates, instead of 2017, 2018, are now 2019 and 2020. But other than that, there are no changes. It's just the dates that have changed. At the beginning of each of the chapters, there is a note. At the beginning of each of the lectures there, before you switch that lecture on, look at the introduction there in your the online section, and you will see that these are the changes that have occurred in terms of this particular lecture, which basically is just in example 1, in example 2, 3, 4, 5, 6, 7, whatever it might be there, that date has changed to that date. But all of the calculations, all of the technical knowledge is exactly the same. So have no concern. So don't worry about the usage of the FA17 material. You stick with your 2019 material there. Okay. Again, remember, when you look to go online and look at each of the individual lectures as you've done this, you will see that written note before you go on to the lecture. Just make a note of that so that you're aware of the changes that have occurred. Other than that, everything remains the same, and enjoy, therefore, the next, I think it's 7 lectures. It's a big chapter. The relevance of it, you may remember from the very beginning, our introductory chapters indeed. Seems a long time ago now, I'm sure. But VAT, you are likely to find in section B a 10-mark question on VAT. Basically, in section B, you see CGT, IHT and VAT as separate 10-mark questions. Section C, as you'll know, to the big questions, 15-mark questions, written questions there, rather than objective testing. And they're on income tax and corporate tax, and a 10-mark exercise. And that's really what we cover in chapter 26, the final chapter within these notes, where there is nothing new in terms of technical knowledge. It's just bringing that technical knowledge together in terms of certain practical circumstances. But other than that, again, you will have seen all of the technical knowledge that you need to have here. So, in relation to those particular areas, make sure that you've read through all of the material. You have noted the changes that exist in relation to the use of material in the lectures, and you will then be prepared to be able to deal with all of the questions in all of the sections. VAT, as I've said, you're going to find it along with CGT and IHT in section B, 5 2-mark objective testing questions based on a set scenario. But that 10 marks, as with CGT, as with IHT, will be supplemented by, we do not know how many, but probably in each 2 or 3 questions in section A, for, of course, a further 2 marks each. So that's how it is going to be tested. Again, a lot of learning so far as VAT is concerned. There's a lot of learning. It's not just doing here. That's why students don't like this particular tax, probably less than they like it, dislike it probably rather more than other taxes there. In the other taxes, there's computations to prepare. There are numbers to crunch. Well, we may have some here as well, but there's also a narrative base to it, especially when it comes to the administrative sections of that. However, Chapter 25, VAT, the last tax that you have to study now, before Chapter 26, which, as I say, is these planning issues, and there'll be an introduction to that, of course, at the end of this chapter. I'll leave you now to go through those individual lectures, and of course, if as ever you have any problems with the content, anything said within that lecture or the study material, again, contact me through the Ask the Tutor forum.